Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by Zach's senior strategist, Kevin Cook, to talk about the insiders and what's going on with them in one of the hottest sectors out there. So we're going to do a joint podcast about the insiders buying there and what else is going on in this sector. So with the coronavirus pandemic raging all year, companies have had to adjust from the shock of the spring lockdowns to adapting to this new Zoom and online business reality. I've taken a look at a lot of the insider moves this year on various podcasts to see what they think is happening inside their own companies, because they do give some good insight into what is happening there. Now, remember, the insiders are people like the CEO, the CFO, as well as the directors, and they'll buy if they're really bullish on what is going on behind the scenes. They're using their own money to go buy more shares because they're greedy, like all of us, like you and I. They want more shares of the company if they think they're going to do really well. If they're going to surge, why wouldn't you want to buy more, right? That's the name of the game. So they want to make money too, and it's helpful for us to follow what they're doing. So I wondered about the semiconductor insiders, as again, as I said earlier, that's one of the hottest industries here in 2020. All those stocks have soared so far this year, and I took a look at the iShares Semiconductor ETF again, the SOXX, and it's up 40% year to date versus just 10 for the S&P 500 and 32% for the NASDAQ now. But over the last 5 years, it's been killing it too. The SOXX is up 290% during that time period versus 132% for the NASDAQ. So how much higher can it go? And are the insiders really buying here at 5-year highs? And should you be buying here at the 5-year highs? I asked Kevin to join me today to discuss all of these questions because there's a lot going on. And we've done the podcasts in the past on the semiconductors, but it's still hot and things are still going on. So Kevin, welcome.
Hey, thanks for having me, Tracy.
So I took a look to see what was going on with the insiders. So I already have a little bit of advantage, so to speak, because I run the insider trader service here at Zach. So I see the insider buys every day when I'm running my screens. And currently in the insider trader, I do own Nvidia in the insider trader because, yes, insiders have been buying at Nvidia, and we previously owned Intel. So I knew that they were buying there too. But I didn't know anywhere else. I figured, well, maybe they're buying some other places too. And so I took a look at all the big top names that we all know in various different parts of the semis. I looked at Advanced Micro. I looked at Texas Instruments. I looked at Micron. I looked at Broadcom. I looked at Lam Research and Applied Materials, to name all of them. And no one else is really buying at any of those. So I was kind of disappointed because I never know what I'm going to find when I go in there to look around. And I did think with Nvidia and Intel insider buying that maybe I might see it somewhere else too, but not really. Nobody's really diving in at any of these other ones here. But I do think the Nvidia buy and the Intel buy are interesting because we don't really see a lot of insider buying in a lot of these big tech names because they get so many stock options always. And it's like the most heavily stock optioned industry. And so why do they need to buy more? They're already getting, thousands of shares in some cases. So normally we don't see that many. And somewhere like Nvidia, I don't even remember the last time anyone's buying over there. And those shares.
That was the one that surprised me was when I saw you buy Nvidia for insider trader because of the valuation.
Right.
And, I think Nvidia is just an extraordinary, excellent company. And it was one of my few smart buys at the March Corona crash lows, just because, they're such a juggernaut of innovation. And Jensen Huang, he's like, I've never cared much for following Elon Musk and Tesla, much to the detriment of my portfolio. But, I put Jensen Huang in a category of technology geniuses like an Elon Musk or Bezos. And so I believe if I was an insider, I'd be buying there. So it was fun to see somebody buying there at this valuation, believing in the long-term trajectory of what they're doing with automation and AI and machine learning.
Yeah, I agree. And I went to go look and dig in a little bit deeper into what that insider was doing. So he's a director. He's been on there for a while, but he started buying fairly early in the year, not like right at the lows, but he started buying into a trust that he owns in April. So, and he kind of reminds me of what you or I would be doing. Usually when you see the insider buys, it's like, oh, they bought 10,000 shares for $400,000 or whatever. And you're like, okay, that's nice for them, right? Because you and I aren't doing that. But in April, his trust bought 4 shares.
Okay.
4 shares for 186 each. So that's like a buy you or I would make. And then over the last couple of months, that trust has also added on like 8 shares here, 6 shares there. So that trust isn't exactly, rolling out the huge bucks, but he did buy some of it into his own account too in September. And that was much bigger amounts. And that's when it was at $500. So
does that tiny trust, does that make you think of like maybe it's for a family member or grandchild or something?
Yeah, something along those lines. Mm-hmm. But it still tells you that, he's still a believer all the way up because he's been dollar cost averaging basically in these shares all the way through September. And, obviously it was not getting cheaper in that whole time period. So, and he also gets a lot of awards, this insider, as I mentioned. They get compensation usually for at least the board members for being on the board in shares. Usually that's how they get it. And so in June, he got 712 shares. That's quite a bit. And then he bought a little over 1,000, I think it was, in September. So just a couple months later at higher prices, he bought even more. So yeah, it's kind of rare to see, again, the tech insiders buying. And then at the highs overall for all insiders, it's much rarer to see them buy when the stock is like breaking out or has had a big run because, they want to get deals like all the rest of us do too. But it says a lot about what they think about the company if you're buying on the highs. So that's also what's impressive about Nvidia. But the shares haven't really done much since the September buys. They've and then we had the earnings, and now it's just kind of sitting there.
Yeah, it's had quite a run. And, a lot of good stuff, a lot of good news got priced in right up into the recent earnings report. So we're just in a big consolidation here between 480 and 580, and strong hands are holding on. And I think I always tell my people, we actually took profits. We had a pretty large position, and we scaled out of some shares above 500. And I always tell my people, well, we're gonna buy more when it goes down to 450, and it won't go back to 450. It just they keep buying it before then. So it's a long-term hold for us.
Okay, so you're not concerned at all about valuations with Nvidia here? I mean, it's trading at 54 times, which isn't super crazy for Nvidia actually, but some people would look at that and think it was expensive here.
Yeah, especially in a strong bull market, and you just watch the price action. There's been no missteps, right? They keep building the data center business. The gaming business seems impenetrable, and the gaming industry. We were talking 2 years ago about it becoming a $100 billion industry. In about 18 months, it's going to break 200 billion. And it's just, I'm not a gamer, so I'm always just awestruck by the power of that industry. And so I always talk to people who know more about it than I do. and understand why it's such a phenom, and especially in COVID. I'd like to give a bigger picture here on semis too. I think one of the biggest surprises with semiconductors, that caught most investors off guard when they thought they had to sell them, was that the impact of COVID globally was less severe than the trade war of the past 2 years, which the semis were already recovering from. So it kind of caught people back on their heels, being afraid of semiconductors. And as we come into the 5G era, right? Like 5G is real now, and 5G is even more of an important paradigm shift because of the demand for high bandwidth technology, right? It's everything from home. It's work from home, learn from home, teach, talk to your doctor, consulting, start a new business from home. We need more high bandwidth than ever. And so just like the software stocks took off because COVID sort of accelerated the need to be digital, it accelerated the demand for 5G platforms and those underlying technologies.
Yeah, that's going to be huge going forward. I know some people who are trying to figure out, vacation destinations based on, 5G or even just, having decent enough Wi-Fi so that their kids can attend class or whatever, or you can do your work from that location. So that's going to be huge going forward. It's going to be haves and have-nots. Who has this technology versus those who do not? You're going to be at a disadvantage for sure.
Yeah, definitely. I just heard a story the other day. Who's the economics editor for the Washington Post that we both follow on Twitter? The woman,
Heather.
Yeah, Heather. I just heard her on Wisconsin Public Radio yesterday. It was probably National Public Radio. She was doing a story on the CARES Act that isn't getting through to the poorest of the poor because they don't even have internet access.
Yeah.
So, people making, less than $20,000 a year who definitely need those stimulus checks are having trouble getting access to them. And there was some deadline extended to the 21st, and the data was that many people still missed that deadline because they couldn't, get online, because you can't do it from your phone. It's a special IRS website, whether or not you file taxes. And even if they made this special deadline 2 days ago, they still won't get the money till next year until they file a 2020 tax return. So just, you look at the people who are disadvantaged without access to bandwidth. So it's almost a national mission, I think, to get 5G everywhere and give everybody some kind of access.
Yeah, for sure, and it should be. Okay, so on the flip side from the Nvidia story is the Intel story. So there's insider buying there, but for the opposite reasons, it seems, from Nvidia. So it's only the CEO who's been buying, and he started a 10b5-1 plan on April 27th. And what those plans are, it means they file it with the SEC ahead of time, and it allows them to buy at times when they otherwise wouldn't be able to buy because something is going on, like an earnings report, or they're buying another company or something else that would prevent them from buying. And it automatically buys based on whatever the plan is they filed with the SEC. So he bought shares twice under this plan now, but he seems to be buying because the shares have plunged. And it's more like a confidence buy. That's what I call it, when the CEOs buy after something happens, the shares dive down, and then they buy them and say, see, it's not that bad, I'm buying some here. And so he's bought twice. He bought in July, and then he bought in October again. And the shares are down 23% year to date, but they're, again, the opposite of Nvidia. They're cheap. They're only trading at 9 times. So
yeah, it's hard not to see some value there, huh?
Yeah, but what do you think of Intel as a buy here?
I like it. I've been looking at it, and and I think I want to buy it around 45, and now I see it's up another 2% today to 47.
Okay.
But yeah, longer term, they're going to be, they're going to be a player, in the future of technology. It's not like Nvidia might be eating their lunch a little bit in data center, and maybe some more advanced chips for, say autonomous driving. And in that sense, Intel's a little bit of a disappointment because they spent $15 billion on the Israeli pure play for autonomous driving, Mobileye.
Yeah.
And so I guess they haven't seen the fruits of that yet. So I thought they would be have bigger success there.
Yeah.
But longer term, I like Intel, and I would buy it here.
Okay. That's interesting. So both the one that's surging and the one that's not are in play, but it just sounds like all of them are in play, basically.
Yeah. I got a good story about Micron if you got time.
Okay, yes.
So Micron is I call them the megalodon of memory. They're obviously the leader of memory chips, DRAM and NAND flash. And I've liked the company for so long. In fact, when in 2017, I wrote this very important piece for SOXX Confidential called "The Technology Supercycle," and it was about how we didn't see any inflation, even though money was cheap. You were not seeing inflation because productivity was so high, and yet you don't see the productivity growth in the government numbers because government is such a big part of those numbers. But when you break it out per industry, and you just look at your own life, how much more productive you are with a laptop, with a tablet, with your smartphone, with all the software apps that do stuff for you. People are able to do all their own taxes now because of things like a TurboTax, and then what Square is able to do for small business. I mean, you can't argue with the explosion in productivity. And I thought, hey, this is going to keep going on, and memory chips will be a big part of that because, I mean, why are Amazon and so it's Amazon's cloud, it's Microsoft Azure. Why are these data centers? Why do they keep growing? Because corporations are creating and storing so much data. So I'm like, it's a no-brainer. You're going to need these memory chips, but yet they would always beat Micron down. And in 2018, they beat it down to $32. And so what I thought people missed was that it's not just about how commoditized the memory chips get. It's that Micron was innovating. They were creating new types of memory chips that could serve data centers, autonomous driving, and mobile phones, and automation in factories with robots. So I just saw them as a huge innovator, and I'm like, I want to buy them at 50 every chance I get because I think the stock's going to go to 100. Well, guess what I just did? On Friday the 13th, no less, I sold my Micron for like a 20% gain because all the analysts had the average price target was like $60. No, every analyst, and why do we trust analysts? Well, because they create models, right? They create a model that it says, okay, this is what the company's going to sell. This is how it's going to translate into earnings. Here's the growth. And they also look at what's going on in the economy and the industry. So if they saw another slowdown that was still in progress where memory prices were just going to keep getting cheaper, that's why they didn't upgrade Micron, and they kept their they kept their heads low, and they kept $60 price targets. And I'm like, you know what? Micron's going to double top here at 58. And so we're just going to sell it at 58. And it's done nothing but go. It's like 10% higher since then. Barron's had a big article on it. The day after I sell it, Barron's does a piece on it.
Oh, no.
They're like, Micron could go to 100 now. They're calling it the cheap play on 5G and electric vehicles and the end of COVID. And so what else has happened this week now? All the analysts are raising their price target. I've seen like 3 banks raise their price target from 60 to 70 this week.
Wow.
So finally now you can love Micron after I sold it.
Right, right. Well, that's a good question because a lot of people have big gains in a lot of these stocks. And should they be cashing in? Or I guess your story is no, they shouldn't be.
Well, I mean, if you like, I believe that this is a long-term cycle. That's why I call it the technology super cycle. If you just go on Google and you search technology super cycle, you should find the video and article I did from 2017. I did a video version in like 2018, and I talk about the chip stocks you should buy. Unfortunately, we went into that 2018 dive, and people got flushed out.
Right.
But if you believe in the longer term of what's happening with technology in data centers, in mobile, in autonomous driving, and now 5G, then that's why the semiconductors have done so well. And let me tell you about a big investor that we both know of who just keeps buying, and that's David Tepper of Appaloosa.
Oh.
He's been a big fan. Now he'll trade in and out of it a little bit, but he keeps a core position. Probably his average holding price, I'm sure, is under $50. And he added again in Q3. So that's David Tepper of Appaloosa.
Yeah.
It's probably one of his largest positions.
Well, that's making a statement there.
Yeah.
So where do you stand on the other hot one for this year, advanced micro devices, AMD?
Well, AMD has always been Nvidia sort of usurped them. Like AMD has always been a player in gaming, and getting into mobile and data centers, and Nvidia always steals the spotlight. But AMD, I mean, they are a strong number two, and they were ignored for a long time too. But they're doing. I mean, it's almost like if you had to choose, it's Pepsi or Coke almost. It's that simple because the technology is almost comparable, but it depends on what you want to do. So, AMD chips are comparable to what's running a lot of the hot gaming, whether it's, Xbox or PlayStation, for desktop or console. And then they're in data centers. They're doing some stuff in mobile. And I wanted to buy, since AMD really got on the move here. I keep hoping I can grab some shares at 80, and you barely get the chance. So, I mean, and I don't know where AMD is trading on a forward basis. Do you happen to know that off your hand? I'll look it up here real quick.
70 times.
Okay, so yeah.
So it's a little pricey here.
Yeah, so that's pretty rich.
Yeah.
For a chip company, but there are a lot of investors betting on the long term here.
So if we get a pullback in these names, what does that mean? And when should I be buying the pullback? Is a pullback literally 5% and then I try to get in? Or should I hold out for a 10%er?
Well, eventually, sometime in the next 6 months, we're going to get a cyclical scare. And what I mean by that is there's going to be, some kind of global worries about, a slowdown in growth. We're not going to have hopefully we don't have any more trade war stuff, but there's going to be one of those where, these stocks can come down, 10-15% easily. Okay. But that's really hard to forecast when that's going to come. And right now there's not a lot of big profit taking. I thought we would see a market pullback of 7% in November, and we didn't. And this market is just so strong. So yeah, if you're looking at going into December and January and you've got cash, you buy 5% pullbacks because that's what the big money is going to be doing. And we'll know more about the global economy after that, though. There's also an argument to be made, sort of a technical argument. You know this because you're watching the small caps. There's a lot of good breadth, right? You're seeing, Amazon is sort of treading water right now, but a lot of small stocks are catching up. And when you see that kind of a breadth move where lots of stocks are participating in the bull market, that's usually a very good sign for the next year.
Yeah, for sure.
So pullbacks will be shallow and rare probably here, and it goes back to my my top secrets of Wall Street. My number one and number two secrets of Wall Street are: number one, they have to buy, and number two, they don't have to sell. And I'm describing the fund managers whose job it is to invest in stocks. There is so much money sloshing around out there, looking for yield. We used to call it TINA. TINA stands for there is no alternative to stocks. And we used to joke around that, eventually that's going to end. The Fed's going to raise rates, and the whole TINA trade, that's going to end. Well, here we are 5 years later, and it's still going on.
Right, and we're about to get Janet Yellen as the Treasury Secretary. So
yeah, we already know that easy Jerome is going to keep the Fed easy for quite some time.
Right. Imagine the discussions between those two. I'd like to be a fly on the wall for that.
Yeah.
Okay. So if I'm a new semiconductor investor and I'm not in any of these names, should I just buy the ETF and be done with it that way?
Yeah, it depends on, what, you always got to advise people, hey, is this money that you don't, need to touch for 10 years? Is this long-term investment money? And you can't pick a chip stock? Yeah, just buy one of the ETFs like SOXX or SMH. And, and the one good thing about if you're new to an industry and you don't know anything about the companies or the industry, when you buy the ETF, it sort of gets you paying attention to the individual companies, because then you can look up, what are the top holdings in this ETF? And why is this stock doing this? And, then you listen to a conference call, or you get a research report and you learn more about them. Maybe for some people, buying the value play of Intel here is the way to go to, put a toe in the water.
Yeah. Okay. Do you still consider the semis to be one of the top industries heading into 2021 then? Like, can it, replicate what it's done here in 2020 again?
Yeah, because 5G isn't fully here. I mean, there's going to, I own a couple of smaller companies that are more on the connectivity and fiber optics side of 5G.
Yeah. And
they're partnered with Verizon. And Verizon has rolled out some what you would call I don't want to call them experiments, but they take a city like San Diego and they roll out these pilot programs to test a 5G network there. It's not available everywhere yet, and it's just going to be more in demand. So, Apple's already got a 5G phone. I think that this, this technology wave has legs well into 2022, and the stocks are going to get overdone. Like you talked about how much the SOXX index is up, and by the way, the Philadelphia Semiconductor Index SOXX is kind of like the S&P. You can't buy the index, but that's why you have the ETF SOXX, which is the ETF that sort of replicates the SOXX index. Yeah. As things get overheated, there's going to be a big profit-taking day one day, and and that's when you buy them.
Okay. All right. Well, I'm excited about the semis going into 2021. So this should be an interesting area to watch for next year for sure. And we'll see what those insiders do. But they're already starting to take a dip in. So that always tells me something, because it's not usual to see, as I said, insiders buying these big tech names where they already get thousands of shares in stock options. So this is the first time I've seen that.
Hey, I'll give one more trading tip. So right where I sold Micron at 58 on Friday the 13th, and then it gaps up to 60 the following Monday. I'm hoping it fills that gap, and that's where I'm going to buy it. So if you can buy Micron anywhere near or under 60, go ahead and do it.
Okay. And
Just don't do it. Just don't do it before I get in there.
Okay. Now, they always report earnings in kind of the off season a little earlier than everybody else because they're on the fiscal year or whatever. So will that be a factor here? Should you try to get in before that earnings report, which I guess is in early January?
Yeah, it'll be late January, I think. I mean, let me look at it again here. Maybe I was actually looking at AMD, but I mean, I'm actually, you know what? Now I'm looking at the earnings that I've got mid-December for Micron.
Oh, is it? I knew it was early.
Yeah.
So not even January.
Yeah, so it seems like it's they're reporting.
They're on the off season. Oh.
Yeah. I mean, listen, if you can buy Micron near 60, I think it's a good long-term trade as part of this technology super cycle. And people underestimate how diverse Micron has become and how I think the key idea here is that in all these different industries, they're customizing solutions for their customers. So if an auto manufacturer or an appliance manufacturer or mobile or a data center company comes to them, Micron can customize a memory solution for them, so it's not just a commodity anymore.
Okay. That'll be interesting. See where they end up. Okay, so let me recap the tickers because there were quite a few. Some were only mentioned in passing, but I'll talk about them anyways. So we did have Intel, INTC, Nvidia is NVDA, Micron is MU, Advanced Micro Devices is AMD. I mentioned Applied Materials just briefly, AMAT, Lam Research is LRCX, Texas Instruments is TXN, Taiwan Semiconductor is TSM, Broadcom is AVGO, and then we had the two ETFs that were mentioned. The iShares one is SOXX, and the VanEck Semiconductor ETF is S, M as in Mary, H as in Harry. So a lot going on.
If you don't mind, I just want to clarify for people if this is very new to them, a couple of descriptions like the AMAT and LRCX. LRCX is Lam Research and AMAT is Applied Materials. Those are the equipment manufacturers. They make the stuff. They make the heavy duty machinery, sort of the arms, so to speak, so that a manufacturer can make chips. They can turn silicon into semiconductors. So they call them wafer fabrication equipment makers. So that's AMAT and LRCX. And Broadcom, symbol AVGO, used to be the old AVGO. They do a lot of different stuff. They make stuff for data centers, and they also make a lot of content that actually goes into an iPhone. They make these different bulk acoustic wave filters and boosters that will go into a smartphone.
Okay, this is all good to know. And there's some other big names that we did not talk about that were left off this list. So don't tweet at me like, what about so-and-so?
Right. What about Jackson?
Right. There are numerous other big names. But a good tip is the one that Kevin already said, to go look and see what are the holdings for the SOXX and the SMH ETFs. And that gives you an idea of like some of the biggest names. Right. In the sector, because you can see what's in there, and that's an easy way to kind of try to find out what's in this sector. But yeah, this is going to be definitely an interesting one to watch in 2021. I'm sure we'll be doing more episodes on it all in 2021 because the semis are always fun and there's just so much that is happening. So you want to be sure to subscribe and not miss a single episode of The Market Edge so you get everything in the new year. And you can get it on SoundCloud, as I know many of you are. And we're also on all the other hot platforms, on Apple Podcast and on Spotify. But be sure to get it somewhere. And I'll see you again next time with some more stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.